Here's what you need to know today. The stock market is wobbling. Bitcoin just exploded to a new record, soaring past $123,000. But here's the kicker. Companies are playing a dangerous waiting game, and it could hit your wallet hard. I'm going to tell you exactly why stocks are acting so weird and what big companies are doing right now to prepare. Stick around because at the very end, I'll reveal what Wall Street's top experts are saying about when this crazy market ride might actually break. First up, President Trump is back at it, threatening big new taxes on stuff coming into the U.S. He wants to slap a 30% tax on goods from Europe and Mexico that don't fit into the new trade deal. This means things like food are usually safe, but other products could get hit. Starting August 1st, even copper could face a huge 50% tax, just like steel and aluminum. He's also eyeing Canada with a 35% tax and Brazil with a 50% tax. This has stock futures, which show where the market is headed, slipping a bit this morning. Everyone's trying to figure out if these are just threats to get a better deal or if this is a whole new way the world will trade. Experts are warning the stock market will be super choppy because of all this uncertainty. Now, for something completely different, Bitcoin is on fire. Just a few days ago, people were talking about it hitting $118,000. Now it's zoomed past $123,000. Why the huge jump? For starters, Washington is finally getting serious about making clear rules for crypto. The House of Representatives is debating new laws that the crypto world has been begging for. Even the president is calling himself the crypto president. And it's not just small-time investors buying in. Big companies are aggressively adding Bitcoin to their cash piles, sometimes by billions of dollars. They see it as a way to make their company look stronger, especially when Bitcoin keeps jumping in value. In the last 5 days, Bitcoin is up about 10% and a crazy 30% over the past year. Companies like Coinbase and Robinhood are also seeing their shares jump thanks to this crypto frenzy. One company, Strategy, just bought over 4,000 Bitcoin for nearly $500 million. This shows how much companies are embracing Bitcoin, and these new laws in Washington are only adding fuel to the fire. Wall Street even thinks Bitcoin could retest these high levels around August. You might be asking, how do these trade wars affect my everyday prices? Well, we're getting a big report on how much prices are going up for regular stuff very soon. Economists expect to see a small bump in June, with prices rising around 3% if you don't count food and gas. Now, what does this mean for the Fed, the U.S. central bank that controls interest rates? The market barely expects the Fed to lower rates in July, maybe only a 7% chance. So even if prices go up a little, some experts think the stock market rally can keep going because investors already expect things to get a little tougher. The big banks are also sharing their earnings this week, which will give us a good peek into how healthy big American companies are feeling during these trade fights. Here's what's wild. Despite all the trade talk, the stock market has been super strong. Why? Some think American companies are just that good, with strong finances and new ideas. Others believe Trump is just trying to make a big noise to get what he wants and everything will calm down. But here's the problem. Company bosses are just waiting. They're putting big spending plans on hold because they don't know if these new taxes will be 30% or 10% or if they'll keep changing. They can't plan for the future when the rules keep shifting. This waiting game is expensive. Now, let's talk about China. Many think the market isn't freaking out about tariffs because China hasn't been the main target lately. But here's a warning. Just because Mexico got hit unexpectedly doesn't mean China is safe. No one is truly out of the woods until these tariff issues are settled. Plus, China isn't growing as fast as it used to, and there's a worry they might start dumping their cheap products on other countries, especially Europe, which would cause even more trade trouble. As for Europe, their stock markets have been doing great this year. This is partly because investors had too much money in U.S. stocks and are now shifting some back to Europe. But for Europe to keep shining, they need to fix their own economy and make it more attractive for money to flow in. So, where are we headed? We're definitely moving away from a world where everyone is super connected globally. The big question is, are we going to have a slightly less connected but still managed global economy, or is it going to be total chaos where every country is out for themselves? Experts say it's a 50-50 shot, and we won't know for a few years. What we do know is that how other countries react impact will play a huge part. And for companies, they used to think China was the place to be, but now they're completely changing where they get their stuff from. It's not just China plus one or two other countries anymore. It's China plus many or even no China at all. This is a massive, expensive change that takes a ton of time. That's your market brief for today. If you found this helpful, smash that like button, hit subscribe, and ring the notification bell so you don't miss out on more critical market updates. Thanks for watching.